You know, with all the economic uncertainty swirling around, there was this one stat about the Bay Area housing market. It really made me stop and think.
Oh, yeah. What was that?
Luxury home sales. We're
Mm.
talking over $5 million. In early April, they actually matched the absolute peak of the pandemic boom.
Yeah, March 2022 levels.
Exactly. Even with, all the stock market ups and downs. So you sent over this great pile of reports, analyses, news clips.
Right.
And our job today, our mission for this deep dive, is to basically cut through all that noise and figure out what's really going on for you, the listener.
Absolutely. And you've got some really good stuff here. CRR data,
Yeah.
specific market analyses, expert takes. It's a solid picture. So, yeah, let's synthesize it, make it clear what's shaping the Bay Area market right now, early 2025.
Okay, great. So where do we start? Maybe look at California overall first, get some context before we dive into the Bay Area specifically.
Good idea. Provides a baseline. So the California Association of Realtors data for February 2025, it showed a pretty big jump in home sales statewide, up 11.6% from January, and 2.6% higher than the year before, February 24.
Okay, so things were definitely moving across the state. More buyer activity, maybe?
Seems like it. Yeah, a general pickup in confidence, maybe.
So how did the Bay Area compare then? Similar trend?
Similar direction, yeah, but maybe. A little less intense. Sales were at 3.5% compared to February last year.
Still up, but not that double-digit month-over-month jump the state saw.
Right. And the prices, this is where it gets interesting, especially for you listening. Prices tell a slightly different story.
Okay. How so?
Well, statewide, the median price dipped a tiny bit from January, but it was still up year over year, about 2.8%, landing around $829,000.
Okay.
But the Bay Area, it was actually the only region in California where the median price went down year over year in February, just slightly, by 0.5%.
Down. That is surprising, especially considering, it's the Bay Area. Prices are already sky high.
Exactly. One of the sources you sent, Santarelli's analysis, pegs the median around $1.25 million.
Which is what, like 3 times the national median?
Roughly, yeah. The national median is under $400K.
Yeah.
So even a tiny dip is from a very high level.
So why? Why would sales be up, but the median price slightly down year over year there?
Yeah, that's the puzzle.
Yeah.
Santarelli called the price trends a mixed bag, and that feels right.
Yeah.
Demand is clearly there, sales are up.
Mm-hmm.
But that slight price dip,
Mm-hmm.
maybe buyers are just more price sensitive now. Or maybe the increase in homes available is starting to have an effect.
Inventory. That could be it. And affordability is always the backdrop there.
Always. Even a slight moderation doesn't make it suddenly affordable for most.
Okay, so state. More sales, slightly higher prices. Bay Area.
Yeah.
More sales too, but prices kind of lagging, maybe even dipped a bit year over year.
Got it. What about inventory then? How many homes are actually for sale and how fast are they selling? That usually tells you if it's a buyer's or seller's game, right?
Definitely. The Unsold Inventory Index, the UII, helps here. Basically, how long it would take to sell everything currently listed.
In the Bay Area, it was 4.0 months in February. Now that's down a bit from January, but it's way up from the 2.9 months it was in February 2024.
So inventory is up quite a bit compared to last year.
Significantly. For you as a buyer, that means more choice than a year ago. Homes are sitting just a little bit longer on average.
More choice, sitting a bit longer. Sounds like good news for buyers. Is it tipping towards a buyer's market?
Getting closer, maybe, but not quite there. It's leaning more balanced, more favorable for buyers than it was, but
But still sellers have the advantage.
generally, yes. Santarelli points out that 4.0 months of inventory is still pretty tight. A balanced market is usually more like 5 or 6 months.
Yeah.
And things are still moving relatively fast once they get an offer.
Yeah.
Time to pending sale in the SF Oakland Hayward area was around 21 days in March.
So not exactly sluggish. Potential buyers might have a little more breathing room, maybe a touch more leverage than last year, but it's not like sellers are desperate.
Exactly. It's nuanced.
Okay, now, let's talk tech. It feels like you can't discuss the Bay Area economy, especially housing, without talking tech. And these sources kept mentioning AI, artificial intelligence.
Oh, yeah. That's become a huge narrative. It's unavoidable. Multiple sources are pointing to tech, and specifically, like you said, the explosive impact of AI as a major driver.
It's kind of amazing. One article even said, no one is talking about the tech layoffs anymore in the context of the housing market's strength.
Which is pretty remarkable considering how much coverage those layoffs got, right? It just shows how fast a new wave like AI can potentially reshape things, at least in terms of sentiment and, well, high-end spending.
High end is right. That luxury market in Santa Clara County, You mentioned it was feverish.
Yeah, that's the word used. Because of the AI boom, luxury sales there were up 115% year over year in March.
115%.
Yeah, it's staggering.
What's driving that kind of heat at the very top end?
It really points to the wealth being generated or anticipated from AI. It's flowing directly into high-end real estate. Look at the median prices in places like Palo Alto.
Oh, yeah.
$4.2 million median price.
Yeah.
And Los Altos, $5.7 million.
Wow.
And these places, homes are selling in about a week.
A week for multi-million-dollar homes.
Yep. That signals intense demand fueled by something very specific and very potent, like this AI gold rush.
It really paints a picture for you, the listener, of this localized economic jet fuel just being poured onto the high-end market. But hang on, there's that one story, the Apple employee. It showed a bit more caution, right?
That's a good counterpoint.
Yeah.
Yeah. The anecdote about an Apple employee putting a $2 million Peninsula purchase on hold because of stock market volatility. Yeah. It's a reminder, right? Even within the tech sector, people are still watching the broader economy, their own portfolios. It's not all irrational exuberance. Decisions are still sensitive to personal finances and market swings.
Right. So AI is definitely a massive force, especially at the luxury level. But individuals are still making calculated decisions. Okay, let's broaden out from just Santa Clara. That overall luxury market, the $5 million plus homes across the SF and San Jose metros, the numbers for early April were wild.
They really were. 104 sales reported over $5 million. That was an 82% jump from February.
82%.
And 65% higher than March last year. But here's the kicker.
Yeah.
Those numbers matched the absolute peak of the crazy pandemic market back in March 2022.
Whoa! So the very top end is just as hot now as it was during that unprecedented time.
Looks like it, based on that snapshot.
Why? I mean, is it just AI money or something else going on? Matching the pandemic peak feels significant.
It's likely a mix. AI wealth creation is almost certainly the main engine, especially down south. But, you know, the Bay Area always has a strong luxury baseline. High net worth individuals, desirability.
True. And
one expert, Nina Hadvani, made a good point. The luxury market is super seasonal. Spring is typically the peak.
Seasonality.
Okay. So while this surge is real, she cautions it might naturally cool off later in the year. Important context for you to keep in mind.
Makes sense. Always look at the calendar in real estate. Okay, another thing that seems really distinct about the Bay Area, overbidding. Homes selling for more than the asking price.
Yeah, the data shows the Bay Area is definitely seeing more of that than other big U.S. cities. And the trend seems to be picking up steam there, too.
So if you're looking to buy, you got to be ready for a fight, basically.
Pretty much. Be prepared for competition, multiple offers, going over asking.
And San Jose was leading the pack on this. What was it, like 2/3 of homes?
Yeah, around 67% of homes in San Jose sold above asking in February. Oakland was about 58%. San Francisco around 57%. Still really high.
And those specific examples are crazy. Like 84% of listings in parts of SF Sunset Parkside sold over asking in the last year.
Incredible, isn't it? And that one open house in the Sunset, over 100 visitors, multiple offers, all over asking. It just shows the frenzy in certain spots.
It makes the list price feel almost irrelevant sometimes, just a starting point for the auction.
Well, and that's partly intentional, right? The Redfin pointed this out.
Underpricing to spark a bidding war.
Exactly. It's a common tactic in the Bay Area. List it a bit low, get tons of interest, create urgency, and let the bidding drive the price way up. It definitely contributes to those high overgetting stats.
So for you as a buyer, you need to know that the list price might just be the opening bid. Crucial intel.
Absolutely crucial for setting expectations and strategy.
Okay, so we've got all these pieces. Sales up, weird price trends, AI fueling luxury, overbidding everywhere. What are the experts saying overall? Are they optimistic, cautious? What's the vibe check on the market's health?
It's a bit of a mix, honestly, which probably reflects the complexity we're seeing. You've got Redfin's chief economist, Daryl Fairweather, saying the SF market is pretty stable.
Stable, okay. Even if it's not back to pre-pandemic levels.
Right. Then Hannah Jones from Realtor.com highlights how much faster things sell in the Bay Area compared to the rest of the U.S. And she notes inventory is better, but it really varies block by block, town by town.
And Nina Hadvani, the luxury agent, she was pretty bullish, wasn't she?
Yeah, her advice was basically, if you're a ready buyer, jump into the market now.
Right.
Especially you assume at that higher end she specializes in, suggests she sees continued strength, at least near term.
But then there's Zillow's forecasts. That sounded a little different.
A bit more cautious, yeah. Their February forecast for the SF Metro, basically flat for the next couple of months, but then a modest dip predicted over the next year, like 92.1% by February 2026.
So some say jump in, others predict a slight cooling. It's not a unanimous call.
Definitely not. And hovering over all of this are mortgage rates.
Right. Still high. They dipped a little maybe, but nobody's expecting them to plummet back to pandemic lows, are they?
No, the expectation is they'll stay relatively elevated. And Fairweather mentioned that too. It continues to pinch affordability, impact buying power for a lot of people.
So even with the AI boom creating millionaires, the broader market still feels the pressure of those higher borrowing costs.
That seems to be the balance, yes.
Okay, one more key thing. You mentioned inventory improvements weren't the same everywhere. Big geographical differences. That sounds important for anyone actually looking right now.
Hugely important. Yeah, the contrast was stark. San Francisco itself, listings were up only about 7% year over year. Modest.
Okay.
But the inner East Bay, Oakland, Berkeley, Richmond, places like that, listings surged by 48% year over year.
48%.
Yeah. According to the NorCal MLS data, that was the highest April inventory they'd seen in 4 years.
Wow. So very different conditions depending on which side of the bay you're on or even which town. Much more choice potentially opening up in the East Bay.
Exactly. Very different dynamics at play. Offers potentially more breathing room for buyers over there compared to, say, SF proper or the peninsula.
Okay, let's try and pull this all together then. A quick recap for you listening. Bay Area home sales are generally up. Price trends are, well, complicated, maybe a bit flat, or even slightly down year over year, unlike the rest of California.
Right, that makes bag.
Tech, specifically AI, is having a massive localized impact, especially firing up that luxury market. Overbidding is common, almost expected in many areas.
Often fueled by that underpricing strategy.
And the experts. They see stability, but maybe not huge growth ahead, with some forecasting a slight dip, while others say, buy now, all happening with mortgage rates still relatively high.
And big differences in how much inventory is available depending on the specific location.
Exactly. It really paints a picture of a complex, dynamic market, doesn't it?
It really does. Lots of cross currents, seemingly contradictory signals sometimes. It underscores why just looking at headlines isn't enough there.
And for you, our listener, whether you're planning a move, selling, or just fascinated by these economic forces, understanding these unique Bay Area dynamics is just crucial. It's a market that often dances to its own beat.
Yeah.
And the power of one single industry, like AI, to reshape parts of the market so quickly, it's a real case study. Shows resilience, pockets of incredible strength, even when the broader economy feels uncertain.
Definitely. Having this kind of nuanced view helps you navigate it or at least understand the why behind those eye-popping numbers.
So maybe a final question for you to chew on after this deep dive. We see how much influence a single sector, AI right now, has on the Bay Area housing market, especially in certain segments and locations. What do you think that means long-term? Does that concentration create unique vulnerabilities or maybe unique opportunities for the region's housing market down the road?
Yeah, that's the multi-million-dollar question, isn't it? The potential risks and rewards of being so tied to one, albeit powerful, industry.
Definitely something to think about.